Canadian real estate frankly scares the crap out of me. As a millennial looking for real estate in the surrounding Toronto area, I think great patience is going to be required to have any major payoff where you're not struggling to make those mortgage payments. And all of this is led up from what we've talked about in the past from an accommodative government, record low interest rates, the fact that our population is exploding from allowing more foreigners in to grow the country. And on top of that, we have Greenbelt and all these protected lands surrounding Toronto where they're not allowed to develop, living on a farm where the basic rule is every 65 acres, you can sever 1 acre. That doesn't allow for a lot of development, forcing condos to go up and prices to go up with them. So I would like to discuss where I sit in this market, a lot of the economists, how they feel the market here is going to go moving forward. And if this is a conversation you can appreciate in return, just hit that like button, folks, because Canadian real estate prices are expected to drop 24% and can crash 40% according to this Oxford Economist. So let's read through this because Canadian real estate prices might be in for a bit of a dip. If one of the world's leading forecasters is right, this Oxford Economist latest forecast shows home prices falling 24% by mid-2024. Higher interest rates and anti-speculation policies are forecasted to begin the price decline this fall. If these measures fail to correct the prices and they rise farther, a crash of 40% and a financial crisis is expected. Now, the firm sees substantial declines in home prices, but not enough to roll back to pre-2020. Beginning this fall, they forecast a 24% decline that will bottom by mid-2024 as home prices have increased 50% in the Bank of Canada, or since the Bank of Canada began cutting interest rates. Even with this correction, the firm expects prices to still be 15% higher than pre-2020. And the Canadian home prices expect to fall 24%. They kind of give you a little chart here, but don't expect home prices to bounce back quickly afterward. From 2025 to 2030, they see a supply outpacing demand and keeping annual growth under 1% for 5 years. This will allow incomes to catch up and affordability to return by mid-2028. The forecast is an ideal combination of price declines and stagnation, minimizing fallout. If this were to happen, they don't see a recession or significant economic drag. Most of the price declines would be unrealized by owners. And we all know that Canadian real estate is by far the fastest growing real estate prices in the G7 countries, where they're talking the US, Japan. And the funny thing is if you live in Canada, to be a millionaire now is to be middle class, like literally anywhere in the 2-hour surrounding area of Toronto. That is what home prices are generally going for right now. But the thing that scares me the absolute most here, guys, is the rent. Typically, when I learned about real estate, coming from a guy that's kind of a value investor, I always learned that if you're buying a rental property, the idea is to get about 4 to 6% off cash flow after all the payments, mortgage payments, taxes, etc. But we do not live in that world anymore, folks. In February of 2022, the average low-rise house sold for $1.68 million, while the average rent for low-rise house was $2,992, resulting in a price-to-rent ratio of 47. The average condo last month sold for $836K, and the average rent for a condo was only $2,443, resulting in a price-to-rent ratio of 29. This disconnect between home prices and rents we are seeing in Canada and Toronto more specifically is not a normal trend, as we can see above when we compare Canada to the other G7 countries. One key factor I've discussed before this in Canada's population is growing twice as fast as any G7 country, but it's also growing far faster than our ability to build new homes, which is pushing home prices even higher. Now, even if the rents don't justify today's prices, the expected future appreciation is what is motivating people to buy homes, or in some cases not to sell them when they move. Now, the other scary thing is if you buy a property and you expect to cash flow decently, the problem is we have rental control. And according to this, the rent increase guidelines for 2022 is only 1.2%. And that is the thing that generally scares the crap out of me, guys. You're buying a condo for almost $1 million that you can rent for $2,200 to $2,500 a month, whereas if you were to buy it, I mean, even with a 20% down payment, you're taking on almost a $600,000 mortgage, tap on taxes, tap on the HOA and condo fees. You're still looking at payments well over $3,000 a month. And that is what is stopping me from wanting to get involved in this market, because the problem is you're going to stretch yourself so far. You're giving up opportunity cost for that capital. And if we're talking about a home that you are just living in, let's be real. If that home is worth $1 million, it is nothing but a liability to you, costing you money because it's not cash flowing you anything. It's kind of the misconception that a house is an asset over a liability, guys. With my portfolio, if you get $1 million in there and you're making 10% off the average market return, I mean, you're talking about 100,000, and even if you're collecting a dividend of 3 to 4%, that's 30 to 40,000 a year, which could not only easily cover those rent payments at 22 to 2,500 a month, but would likely cover the rest of your bills in perpetuity while still getting appreciation off the stocks that you own. This is the stuff that scares the crap out of me, being a millennial with basically over $400,000 in savings and not sure how to approach the real estate market. And I've realized I don't want to be competing to shovel a sold stick in the ground with 20 other people, that taking a breath and watching how this pans out might be the most appropriate thing for me to particularly do. Maybe not everybody, but that's just generally how I feel. Is I almost feel sick getting involved in this market here, guys. Now, whether it corrects or not, nobody truly knows. But with competition like this, it's always typically a sign of somewhat of a bubble. And honestly, I don't want anybody to be broke struggling to make mortgage payments, because it's just not a fun life to be had here, folks. This is the idea of passive income, FIRE, financial independence to one day retire early. And as much as a house can be a blessing, honestly, in this market, I feel like for most people, it's a curse. And I don't know many millennials buying homes. Most of the home sales I see going on right now are between people selling homes to looking to buy new ones in a cheaper area, or people leveraging their current property to buy new homes. But the good news is we're already starting to see a slowdown in the volume and listing of homes on the market. And I'm already seeing in my own area that homes are sitting up on the market for longer than a week, when typically they would be sold literally the day of listing. So all I can do is pay attention, take a breath, and I want to pass the question off to you. What do you guys think about all of this in that comment section below? I'd love to hear about it. Stay cool, stay awesome, and as always, I look forward to catching you in the next one.